following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, we're coming back here to the Diagnostic Trading Hour. And let's check out where the markets are at right now. We got the S&P is up 2.75 points. We got the Russell up 0.7. NASDAQ is currently up just 0.75. And the Dow is up 31 points on the day. Looking on over at copper. It's pretty flat right there in the indices. Looking at copper, we got copper is up 1.5%. Copper's been moving like crazy lately. We got gold, and that's, by the way, that's a dangerous thing to trade. So make sure that you definitely have it down. Maybe check out the Nadex product to trade that, because it is a dangerous product to trade. It can move really fast and has a high tick value. Hopping on over to gold. Gold is barely up right now. It's 90 cents off. We got oil and silver. Let's see. Let's check out silver right now. Keep it in the metals, I guess, to begin with. It's up 1.2%, so it's moving pretty big. So silver's moving big, and gold's just sitting flat. Looking on over at natural gas. Natural gas is down 1% on the day. Natural gas is usually a consistent market mover. We got oil is up about 70 cents right now, and was in a range most of the day. Thought it was going to stay flat there, but it decided to turn on around. And let me pull that up real quick. We'll take a quick look at it. But I was pretty shocked. It started just moving on up and finally broke out of that range that it's been stuck in a good chunk of the day. You can just see like right here is just oscillating. Finally decides to move. And I was figuring it could come on back down and hit settlement, but that's why you got to trade the chart, not the opinion, right? And it made one little push down on volume, and then just ran right on back up. All right, well, that gets us caught up there. Moving on over, we'll check out, let's see what we got on our ags. We got soybeans is down 17 points. Nice move in the soybean market there. We have euro dollar is currently down 21 pips. We got the Aussie dollar is currently down, 15? We got the pound dollar down 29, and the dollar franc is up 13, with the dollar CAD currently down 56 pips on the day. So nice move on dollar CAD. That had quite a bit of news that came out this morning. We didn't get to go through that full news plan, but I just made sure you had it on your Be Aware event there. We got the dollar yen currently up 17 pips. We got the Aussie yen is currently down 4, with the euro yen up 6, and the pound yen up 9, with the euro pound down a mere 2 pips on the day. I had a caller this morning on the Bull Bear Binary Hour, Tommy O'Brien, Mike, here in Dallas, and he was asking about Quadruple Witching Friday, and we're going over a lot of different topics, but I wanted to go through just a little bit more, and to sort of talk about, what is Quadruple Witching Friday? You hear this term, but has anybody explained it to you before? And I figured it'd be just a good little short lesson. Basically, it's one of the most important days to be aware of for any trader, and it's basically due to the impact that it has on the markets. Futures, obviously, they carry a high risk with their high leverage options. They have exercise issues. That's actually going to come into the whole impact reason here. We got stocks, require a lot of capital, and pretty much all those, depending upon the strategy you use, of course, you may get stopped out on the volatility that can happen during Triple Witching Friday. And obviously one solution to trade that is Nadex, binary spreads. But before we dive into that, talk a little bit more about, again, just what it is. Also, it's known as Freaky Friday. So Freaky Friday basically used to be called Triple Witching Friday, previous to 2002, before single stock futures were introduced. And so once the addition of single stock futures came on, it became known as Quadruple Witching Friday. And some people still call it Triple Witching Friday. I still get in the habit of it. Basically because single stock futures aren't as well known, so many people keep using the word Triple Witching Friday that it's just sort of they just don't know to call it quadruple, or they just forget because they're just in the habit of calling it triple for so long. So, I mean, if you think about it, it's only been about 13 years, which doesn't sound, I mean, it sounds like a while, but really, before that, it was triple for a long time. And it occurs on the quarterly expiration of 4 types of options. Okay, hence the term quadruple. So there's stock index futures, which a lot of people aren't aware of, or everybody's aware of stock index futures. Stock index futures, there's stock index options. So you got like ES options. You got the stock index options, like SPX. You're going to have the stock equity options, such as spiders, whatever. And then you're going to have the single stock futures. That's the one, the single stock futures is the one that a lot of people just aren't aware of. And those options there. And all those expiration dates all align and expire on the same day. And so basically what happened is like it became like this coven of all 4 coming together, having a simultaneous expirations has a odd impact on the markets, hence the term witching. And it always is on the 3rd Friday of March, June, September, and December, hence Friday. So 4 different instruments there, quadruple, coming together for an odd impact, all at the same time, witching on a Friday, quadruple witching Friday. And that's just become the industry term. And obviously the simultaneous expiration of these 4 types of contracts can cause some chaotic volatility in the markets and at least, some chop. The event it's not really a bullish or bearish event. Usually June is actually a bullish week. Most actual quadruple witching weeks are bullish weeks, in fact. And as you can just look at this week, if we pull up and look at a chart, and I was pulling up some stuff over on one of my favorite resources. I'll show it to you here in a second that I like to look at. But let me go back to a normal. Here we go. Got the S&P. Maximize that right there. Obviously, this is a weekly chart. Market was up. And, I mean, if you've been trading the market at all, it's an up week. Quadruple witching week usually is known as a positive week. We can look at the trend for this year. Again, it's the 3rd Friday. So you can test out this theory, right? So that'd be, the 17th of January. The week that ended on the 17th. Well, that was not a positive week. And let's see here. We go into March. And this is what seasonality is like. It's always a percentage number. March, was the 17th? I may have my Fridays mixed up. Yeah, no, it is the 17th. Yeah, it's the 3rd Friday. And then March is the 21st. So we go over here to the week of the 21st. And I need to look at, let's see here. Get that done right. Because if I don't look at the indices, you get all the after hours and all that stuff. And all the stats are based on normal trading hours. Okay. So, what was that date again? Let's go to March 21st. So, yep, that was a down week. All right, so the stat has not held really true this year. And then we'll have June, and then we'll have September. So, anyways, I'm pulling it up here, and I don't know why. I don't even know why I said January. January's not one of them. It's December. So I was a little bit of a month ahead on myself. And let's see, December would be the 20th, would be the 3rd Friday. So let's see. And that's obviously just a bullish week anyway because it's Christmas week. Week leading up to and all that. But, yeah, so December was, March was not. Obviously, June is, we can go back and you can look at, just a couple, you can look at, a series of these. You can go back and go, okay, what about September, week 1, week 2, week 3 was positive. June of last year, this week was not positive. You go on back, you can just look at the seasonality and does the seasonality line up, et cetera, et cetera. It's not necessarily a bullish or bearish week, but I mean, it has been historically over the last, 40 years. It's been a historically bullish week. Over the last decade, the Dow has actually been up on June. Okay, this is the Dow. So we could look at, there's a lot of different ones we could look at. We could even look at just the diamonds. That's another way to look at the Dow. But we could look, let's look at June of last year. And let's see here. Depends on when that Friday fell. My guess is that was a negative year last year. And then right here. Yeah, so 8 out of the last 11 years, according to Wiley's Almanac, Stock Trader Almanac on Wiley. Good little resource to have. So you can go over here and get all sorts of stats. And it's like right there. June triple witching day. Dow Jones Industrial up 8 out of the last 11. But overall, a neutral day. So, as far as just the day of the month. And so that's a resource I'll use quite often to go in and just pull up stats. And there's some cool stuff on here. You can go in and there's a bunch of online tools you can use for the presidential cycles, for the best days of the week on an indice. You can look at, what's known as the free lunch in December, and the January barometer, and the lame duck issue. So a lot of different presidential cycles built in. Different volatilities, probability indices. There's a lot of information you can check out. And you just go in there and click on the monthly almanac. You got to have your account. And sign in with that. And once you log in on that, then you'll be able to go in and just basically pull up any day that you want to and see all the stats. So I'm all about stats, right? And so you can check that out and look at it. Okay, so anyways, back on track, which is sort of going into the whole little cycle. Again, if you ask me, it's not really bullish or bearish, but 7 out of the last whatever, but still I'm going to trade the chart anyway, so I don't really care. So the day, basically on this day, both bulls and bears are closing out their positions to do option expirations. Or due to the option expirations. And let's see here. Might put this in a little article format. Due to option expiration. And basically what that does, that causes a lot of volatility. And with these expirations all happening at once, more positions are being closed out, leading to the increased choppy volatility in the indices. So just, when you have all these different options, all these different contracts coming together, that's going to, cause a lot of additional volatility, if that makes sense. So I'll go into a little bit more about, embracing it or avoiding it and different things that are happening on that day when we get back after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome on back to the Diagnostic Trading Hour. Okay, so we're basically just going into quadruple witching Friday and what is it, and I explained that, quadruple because you got 4 different kinds of contracts coming to expiration at the exact same time, 4 times a year, and this is basically like a covenant of 4 different things causing an impact on the markets and still witching, and then it's always on a Friday, the 3rd Friday of each quarter, so March, June, September, and December. It's not necessarily a bullish or bearish event, even though on the Dow it has been bullish more often than not over the last decade, according to Wiley Finance as seasonality. But I wouldn't necessarily trade it just that way. So should a trader embrace it? Should they avoid it? A lot of traders avoid it. They're just like, I'm just going to go play golf. Others try to capitalize on it because of all that additional volatility. So the increased volatility will actually pump up sometimes the implied volatility in options on those specific markets intraday. And usually it actually doesn't happen the day. Usually it happens the previous day, like yesterday. Now, you won't really see it on the Friday expiration options. You'll see it on further out options because Vega has very little impact on implied volatility or on an options price. Vega has less impact the closer you get to expiration. It actually has a larger impact the further you get from expiration. The reason is implied volatility is expected move. So obviously, the more time there is to expiration, the more sensitive Vega is going to be, the higher it's going to push it around. So further out expiration options can actually see a little increase in premium. So there are some premium plays on longer-term expirations that can be played like on Wednesday, Thursday, Friday. There, Thursday when it pumps up, and then it, you get in right there, and then on Monday You get that increased in premium. They get sucked back out of the market, and you get 2 days of the market being closed. It can be a good potential premium collection strategy. Arbitrage traders, those of you out there that like to do that, it's fun to do. It's a lot of work, a lot of math. You got to have a lot of API feeds, and you got to know exactly what you're doing. But obviously, there can be a frenzy of pricing discrepancies and options and things like that as all these positions are flying and things are closing out. And so there's a lot of different ways to trade it. Most of the chop occurs. Okay, this little frenzy activity occurs as the market comes to a close. So during that final hour of trading between 3 and 4:15 is when you want to sort of really be aware that that's when the witching hour is. Okay, and so that's when you can actually see all that coming into place. By the way, I obviously didn't term it witching hour. It's just what it's been called. So how can you take advantage of this final hour of trading on the indices? This is an indice impact event, okay? Obviously there can be some crazy volatility spikes, so the market could just spike against you, stopping in a trade. There could be a lot of risk when you're trading futures. We talked about that. There's a lot of capital you got to put up to day trade stocks. Option traders, they don't really get the best leverage. They think they're getting like all this 10 to 100 to 1, but they're getting like 10 to 1. And so, the leverage is not that great on the option side. The margin can be high. There can be uncapped risk depending upon what kind of option strategy you're using. And then you got complexities of Greeks. And you got exercise and delivery issues with options and with futures that you need to be fully aware of. So those could be a little bit intimidating and maybe not seem particularly appealing to most traders at least on a quadruple witching Friday. And like I said, most are just apt to skip trading the day altogether. So what would be a potential way to actually take advantage of quadruple witching Friday? Well, again, using Nadex spreads or binary options. You can go in there. You can avoid a lot of the pitfalls that come with trading futures, options, stocks. If you don't have an account, hop on over. I'll show you where to get one. Okay, so you can, it's a good day to do it, right? Hop on over to TFNN.com. Click on the Nadex banner on the right side of the page. So right here. And then under trading, click on Demo Trading Account. Once you've done that, fill in your username, first name, last name, phone number, email address, you'll get a demo account. Once you're done with that, you can create an account, fund the account with $100, place a live trade, then they'll extend out your demo for like a year for you. If you have any issues with that, just email me. I'll be happy to help you out, okay? If any rep's giving you an issue on doing that, it shouldn't be a problem if you have it funded in a live account. So just email me and I'll let you know who to contact to get that taken care of. But we'll talk about why you might actually want to consider doing this on Triple Witching Friday compared to other instruments that you could trade. Stay right there. We'll be back right after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're going back here to the Diagnostic Trading Hour. And so we're just going over again. I'm going over, Freaky Friday here. And what does that mean? How does triple witching work? So if you were going to trade, we talked about the issues on trading futures, Forex stocks on this day. What are the risks associated with trading it? So obviously high leverage on futures, the cap rates put up on stocks, exercising, margin, complexity of Greeks on options. So what is a different way? We talked about getting an account over at Nadex, over at TFNN.com. Grab a Nadex account. You can log right in and, set up a demo account right under demo trading account. And that'll get you going. Then from there, what we want to do is let's look at what are some of the advantages. Why would you do that? Why would you even consider it? Well, one, they're low-risk contracts. The binary and spread options are low risk. You can also avoid a lot of the pitfalls that come with trading futures, options, and stocks. You can easily choose to take advantage of, the simple and unique options on the Nadex exchange, on the U.S. indices specifically. All the Nadex spreads and all the Nadex spread and binary options are cash settled, so there's no delivery or exercise issues to deal with. Let's see. Every Nadex spread, I'm just thinking about all the different things. Every Nadex spread and Nadex binary option has defined risk, so there's no margin calls. You don't have to ever deal with the margin call. With all those spikes, it can be important. And then with the defined risk, you don't have to have a stop loss, so especially if you're doing strategies like in the last hour before expiration, which can be really important on the spikes during that triple witching hour, which happens between 3 and 4:15 today. as far as the spreads go, every spread has a tick increment of 1. Over on, the diagnostic scanner, the one we made that's available over there on TFNN, you can log into that and I actually show you the tick value. Every tick is 1, so it moves in 1 or 0.1 or 0.01 or whatever, but they all move in single ticks, and this makes it really easy. So if we just look at the U.S. indices specifically, you can see they're all, every tick value has a value of $1. You don't have to deal in quarters and also other weird stuff. Every tick value moves in a 1, whether it be a 1 or 0.1 or 0.01, etc., and it's always worth $1. So it's really simple. You don't have to be all intimidated about FX conversion and about odd tick sizes and all that weird stuff that happens with futures. It keeps it really simple. And then all the binaries, they have a maximum value of $100. So, by the way, when I say $1, you can do 100 contracts. You don't just have to do 1. So it can be a $100 value a tick or whatever you want it to be. But you can bring it all the way down to $1 tick, so you can better control your risk. The binaries, maximum value is $100. So you can do a $5, $10, $30, $50, $70 trade. So a trader with a small account can trade it. You don't have to have 5, 10, 20 grand in your account. You can. I know traders that have plenty of money, 6 figures plus, in their Nadex account. That's not a problem. But also, I got traders that have $500. So depending on the strategy you're doing, you actually can go in with a low risk trades. There's no day trading restrictions. You don't have to have 25 grand in your account like you have to have with like stocks and equity options to be able to day trade them on a consistent basis. So the risk is often like really low comparatively, especially only on an hour until expiration contract. And the Greeks are much less of something you need to consider. Like you really don't have to worry about the Greeks or think about them. Theta is, there's only an hour left until expiration. So, there's little or no time decay, that you even have to think about with Theta. If you go and look at, Vega has a, larger impact the further out of expiration is. So a 1 hour expiration will have little to no impact from a change in implied volatility. Gamma is going to be maximized to make the option move fast, creating a highly effective leveraged product. So with defined risk. That didn't cut both ways. You got Delta, I'm not talking to the option traders out there. Delta's going to be pushed right to a 1 right out of the gate because the expiration is so close. And obviously, Rho, we don't have to worry about it at all because there is no interest, and 1 hour till expiration, interest really doesn't matter anyway. What does all that mean? All that complex stuff I just said, if you don't know what that means, is fine because what it means is it doesn't matter. It's really, really simple in the last hour till expiration, and especially on a Friday. So as a novice trader, or even as a veteran trader, you can literally ignore pretty much most of the Greeks, just understand the basics of how they move. That's obviously important. And, get that down, but you don't have to analyze 100,000 different option chains and 50 different expirations. You're focusing on one expiration, one Friday, one quarter, every quarter of the year. And you can pick among, you got the S&P 500, we got the Dow, we have the NASDAQ, you have the Russell, so the 4 U.S. indices that are impacted by this. And you can do premium collection trades on them, you can do directional trades on them, you can do breakout trades on them, you can do range-bound trades on them. So there's a lot of different ways that you can take advantage of this crazy volatility that often does take place in the last hour. Doesn't mean it's always going to happen, but it's sort of just interesting. To me, it's more interesting than anything because you hear about it so often, or you hear about it every quarter, and you're like, wow, what is that? I got to figure out what that is one day and what that really means, And so we can go in and we can look and go, well, what happened? Okay, what was the last one? That's where you want to pull up historical charts. And you go back and let's just say we looked at the S&P, and so we pull up. This over here, and see if we keep it sort of simple. And we'll look at, let's see, what was the last time? Let's see, March, 14th? So we can go over here, we pull this one up. And we'll scroll on back. We're on back here to March 14th. And I have to go a little bit further back. Let's make this go faster. Here we go. Right here. Okay. And 13th, 14th, we're on the right day. Now it's going to get to the end of the day. All right, so March 14th, we're in the last hour, which is basically going to be, what, your 15 to 1600. And doesn't mean, I mean, it may be nothing, but you notice there is a little spike in, volume there. And, let's actually go over to 10-minute bars just to see what's the activity like. All right, actually, we'll go down. Let's go down in bar size because I want you to see this more. That's going to take a while to load. You know what? You have to pull it up if you want to, because if I do that on the air, it may take like several minutes to load all that data in intricate detail in minutes. But here's what we got. Got about 3 points here in the last hour on a Friday. Often the last hour of a Friday is very quiet. But you got those few points right there that you can take advantage of. It comes in. Market flies down. We get a move basically high to low there in the last hour. Well, I guess 1400 is too early there. We got to go down to 3 o'clock. Okay, so right there. Got about 6 points on the S&P on a Friday afternoon. And that was in March. And that, just like I said, just in that last hour there. And then we go back. We can look at, let's see if we have January on here. If not, I can load a little bit more data on this. I just like to get up and just show you a few of these. Maybe we can actually pull even last year's up. Let's see if we can do that. If I can get 4 minutes, 375 days. If I can pull the right thing in there, that helps. All right. And that'll take just a second to load up, but it'll give us a chance to look through a few of them. And while that is loading, I'm going to go over. Just do a quick spot check on the news that's coming up, and we'll do a review here at the end on the S&P. Just looking back over the last, and you may not do S&P, you may do Russell, you may do Dow, but okay. And what do we have coming up? So we have the USD CAD stuff all that this morning. Nothing happening Saturday. Sunday, I'd be aware of the China HSBC flash manufacturing PMI coming out. That can impact, like, say, the yen and the Aussie. So 9:45 p.m., China HSBC flash manufacturing PMI. Be aware, impact on Aussie and yen. Okay, that's really what you'd be looking at that for. Not so much trading it, but just being aware of it. Governor Kurata speaking at what? Okay, that's a be aware of it. 2 a.m. on Monday. Bank of Japan governor's going to be making a speech, so that could cause some volatility. Let's see. We got. I'm trying to see if there's any significant impact on these. We have the French and German flash PMIs there. No significant impact on a consistent basis. So I would do a be aware, like 3 to 3. Well, we got 3:34. So I just put between 3 and 4 a.m. You're going to have French, German, and the European flash manufacturing PMIs. Just be aware of those events. So that will cause, some volatility, but it isn't like some major market mover. But it's, it'll, like, if you're not aware of it, and 3 o'clock, boom, it pops, and you're trying to do a premium collection trade, and it moves 20 ticks against you, you shouldn't be surprised. So you want to be aware of that one. Looks like the only other event we have is going to be the retail sales event. And yeah, that's loaded up, so we'll be able to come back over here and check this out. All right. So, not retail sales, but existing home sales. And on the existing home sales report, I'm going to pull that up, and we'll look at that. That might be the one tradable event that we'll have for Monday. So we had multiple be aware events. So with Kurata speaking for the yen, with the China event the previous night at 9:45 for the yen and the Aussie. Then impact on the euro between 3 and 4 when the German, French, and European flash PMIs come out. And then at 10 a.m. here in the U.S., checking out the euro dollar, seeing if we can do any kind of decent trade. It's going to be a 10 o'clock expiration. No, it wouldn't be a 10 o'clock. It's going to be a 10 o'clock release, I mean. So we're either looking at either an 11 or a 3 o'clock expiration. And so first thing I'm doing is I'm going straight to see if 3 o'clock looks like it might work. Yeah. Going down the list, we've had one big move, a couple that were like in their 30s, and the rest were like 5 ticks, 10 tick, 3 tick, 2 ticks. So I'd actually be willing to do a $30 iron condor. I would enter on that trade probably pretty close to it at 9:45. So 9:45 a.m. entry, euro dollar, iron condor, buy the lower spread, sell the upper spread for the 3 p.m. expiration for a minimum profit of $30. And that is your news trade for Monday, June 23rd. Okay. So we got the news segment out. Let's go through, see how far back this loaded for us. All right, good. So we got June of last year. Let's see, the third Friday of June, because it's always that third Friday. We're going to look at it to sort of see what did it look like last year on the 21st of last year. So we grab this right here. Fast forward a little bit. And we're going a little too far. Okay. So pulling this up, and again, just making sure I got the right date. Because it doesn't do a lot of good to analyze the wrong date. Okay, so June 21st. That's the 19th. 21st. Okay. And on this one, it didn't seem right. Why is there a day gap in there? Was there it's not a holiday. Go back and do one more double check on my calendar. Yeah, 21st. Looks like there's just a little bit of a gap in data. That's interesting. Well, that's no good. Because it ends right after. You gotta love that. So they're missing a day. June 20th is missing. Or else that was just a really slow day. One of the two. All right, well, I'll see if I can fix that in between now and the end of the break. Be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, come on back here to the Diagnostic Trading Hour. And let's see, I was going to pull up a couple more things for you, but we pretty much covered the whole, quadruple witching. And I hope everybody maybe picked up 1 or 2 things they didn't know before. And a little history on it, where the term came from, when it started, when it went from triple to quadruple back in 2002, when the single stock futures came on. And a lot of brokers don't give access to them, so it's not as well known. But putting all those pieces together helps it make a whole lot more sense. And I think it's an important thing to note is it's not a bullish or bearish thing in and of itself. Even though there are some cycles on, saying, hey, 8 of the last 10, but maybe that was 8 out of the last 11. Well, maybe the last 3 were bearish. And that it's been highly muted since a lot of traders have just started not trading or exiting like the day before. That's one of the reasons the implied volatility now picks up the day before on it. I was having a little issue with the ES data for that one specific day, magically. So I'm going to go over, I was just going to look at Russell and see, just on it, just out of curiosity. There may just be a gap there. 20, 20, 20th. 21st. Okay, there we go. Well, we did get the day. Finally. All right, here's the 21st. This is what I wanted. And move this on over here to help me see the end of the day. Okay, so we got basically 3 o'clock high, 4:15 low, about 5 points, about a 500 point, $500 move, 5-point move as well. And that was on June of last year over on the Russell. And just looking at the Russell last year comparative to this year, see how it sort of like, oscillated. Then it ran, let's back up this 4 minutes. Let's get a full picture of it. All right, so we got a lot of, choppy oscillation. It actually did a run down right before lunch, and then it ran on back up, and then it bounced around a little bit. But, we got some oscillation in there. Nothing that was just significantly wow, but something to be aware of. What about September of last year? Okay. Well, September of last year, if we go in and check that out, that'd be September 20th, would have been the 3rd Friday. So we can go over here and go, okay, let's check out Quadruple Witching Friday, September 20th. Getting closer. There we are. Drag this over. Oh, a little too far. Here's the 20th. Going into 3 o'clock here to 4:15. And we did get about a 5-point sell-off. All right, so that's interesting. Going on in, and that's 2 of them now. Let's check out the December one, which is going to be the 20th. And this is the Friday before going into the whole Christmas week. Usually a bullish day. Let's see what it was. So December 20th. Wrap up with that one because we covered most of the other ones on a couple of the other indices. On the 20th, if I can get it in here, we'll see. There it is. All right, so December 20th, at about same thing. Moving down a few points right there. All right, we all have a great day, great weekend, and I'll see you next time on the Diagnostic Trading Hour.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.